All right. So now that we talked about how do we return it, we already figured out that whole section. Now, chapter 6 is where we're going to learn how we actually sell our periodic inventory. So, as we mentioned through a lot of the scenarios, right? We don't keep track of sales, right? Because at the end of the day, someone's going to take a physical count and they're going to just configure the numbers out saying, well, this is what we bought, this is what we have left, so we are going to assume that we sold everything, okay? So in this case, let's talk about what sales does, right? Sales is a main core of operations of the business, right? It's the nature of the business. So if you remember this from chapter 1, okay, where our assumption is that as a business, our goal is to make and take resources, right, and convert it into a product or service that we provide to our customers, right? So in this case, our goal for most businesses is to make money, right? And what are these things that are going to be included in the cost of the merchandise, but what is included in the actual selling price itself, okay? In this case, it's going to be the selling price of the product, okay, which is going to include all costs to get the items to the store, right, plus a certain profit percentage, okay? So for example, let's say I want to make a 40% profit, right? I need to calculate how much 40% of that is going to be, so then I can figure out what kind of price points would I want to sell my product. But it takes a lot more than that, right? As a profit manager, you want to make sure that whatever price point that you sell your product as is going to be enough for a consumer to want to spend their dollars on the product that you sell, okay? Because you have to remember, a lot of the times, a lot of shoppers, right, they want to look for the best quality for the cheapest price, okay? Because they themselves also want to save money as well, okay? So the profit percentage or profit margin is going to be what's going to determine the selling price, okay? And again, we are trying to sell the products for cash, right? Remember our conversion, right? We buy our items with cash, or we buy for the items. We do something to make sure that it is available to sell. Then we sell those inventory, and once we sell the inventory, it becomes cash back to us, okay? And of course, because we are going to be selling things, right? 100% we must charge sales tax, okay? There are only a few states that don't charge sales tax, okay? I don't remember what they are, but I think there's 5 states that don't charge sales tax. So in this case, make sure you do know which states that you are going to be doing business in for you to be able to charge sales tax. Of course, in the state of Nevada, we do charge sales tax. And to make it sweet and simple, I'm only going to say tax is 8.25%, okay? Okay, because I think right now, the state of Nevada, it is 8.375%, okay? No mumble jumbos, because I don't want you to have to get to that point where you're going to get extra numbers. Let's just keep it sweet, simple, 8.25% for sales tax, okay? Because sales tax is actually a combination between the state and local agencies, so the local counties, okay? So, for example, right, LA County and Orange County, right, have 2 different sales tax. Even though they're from the same state, right, it's because of the county that they belong to, right? If you do business in LA, I believe it's 1% higher than it is in Orange County, okay? So think of it that way. So sales tax is going to be pretty much diverse in this situation. So I only want you to know 8.25%. Okay? All right, so let's talk about sales. So when we sell a product, okay, so for example here, right, on June 1st, okay, 10 items were sold for $9.99 each, and sales tax was 8.25%. Record the sale. Now this is straightforward, right? We're going to assume that all that we either got cash or we got paid something, right? In this case, it says that we sold it for $9.99 cash. So in this case, we need to understand this. We are increasing our cash flow because we're receiving money from other people, right? So therefore, we must debit our cash account because we're increasing our cash account. And in this case too, when we sell a product, right, we sold something. So therefore, right, that's going to be in relations to sales, right? Sales is a revenue, right? Since we're increasing our sales, right, because we sold something, right, then we have to look at the accounting model and it says that, well, in order to increase our sales, it's going to be a credit. So that's exactly what you're going to do. You're going to have sales, okay, cash or whatever form of payment you had. And of course, we have to talk about sales tax because sales tax is going to be included in most items that we purchase, right? Especially when we sell it to our consumers, right? Depending on what state you belong in and what county that you will also are purchasing from, will charge the sales tax accordingly. And sales tax, since sales tax isn't going to be something that we collect for our own purposes, it's not part of our profits. It's actually going to be money that we collect to go ahead and forward to the government. So therefore, this is money that we owe to the government. Okay? So therefore, we're going to be introducing sales tax payable, which is a liability because it's not our money, right? It belongs to the government, right? So here, of course, we're going to recognize that we're going to have cash or accounts receivable, right? Depending on what you actually got when you received them, when you sold your items. Did you sell for cash or did you have it sold on account? Okay. And of course, we're going to recognize our sales, right? You're going to recognize sales first because in this case, right, the total amount of cash is going to be a total between the sales and the sales tax combined, right? So in this case, you have sales, right? You sold 10 items at $9.99, so that's going to give you $99.90 plus the tax. Tax is going to be based off of the sales price, not the quantity of items you sold, okay? So in this case, if I sold $99.90, then my tax is going to be based off of that, okay? So then I multiply that by 0.082% to give me a total of $8.24. So then in combination, we will get a total of $108.14, okay? Never, ever, ever will you come across a situation where your customers is going to give you money for your sales and then money for the sales tax. They're just going to give you a lump sum money, right? But in your books, it is your responsibility to make that separation because that money's not 100% yours. A portion of that money belongs to the government, okay? So on your end, you need to make that separation for your taxes and so on and so forth. But the great thing about having, receipts and things like that and doing the accounting when you do sell your items, right? You had the line item for taxes. You just calculate all of those throughout your entire sales and it does it for you automatically, right? But that is the goal here, right? You need to keep a separation from the actual cash that you actually receive, right? No one's going to give you the sales money and then sales tax separately. No. They're going to give you a lump sum money, and it's your job to differentiate the two. Okay? Any questions?
No.
All right, that was 6.1, okay? And of course, under periodic inventory, again, since we don't actually keep track of what we sell, okay, this is all we need to have is just this journal right here that we sold something, right? We don't need to keep track of our inventory because it's periodic inventory, right? We don't keep track of it until the end of the accounting period, okay? So 6.2, okay, of course, if you have periodic sales, you're going to have to also assume that people will return your products to you, okay? Because, again, this is all about customer satisfaction, right? When you sell a product, your assumption is you're gonna most likely have one person come back and return your product, okay? Now, in this case, if I have someone who does return my product, the reasons could be infinite many reasons, right? The product that they purchased was broken or defective. They just don't want it anymore. Okay, so again, a lot of, gifts that you give people, right? Sometimes they don't like it. You give them the receipt, they return it, right? Because they don't want it. All right, simple. And of course, or third, they're just completely unsatisfied with the product itself, right? They gave the product a chance, they tried it, they didn't like it, so they're just completely unsatisfied. Okay. Now, of course, what we have to do as a company is we need to set up company policies and rules and regulations when it comes to returning items, especially because our goal is to ultimately sell our product, right? And when we sell our product, we want to keep it sold, right? If we allow our customers to have infinite amount of reasons to just return their product and get a full refund, right? There are some people out there that actually do this where they buy products, they wear it, and then they say, okay, I'm going to go return it, right? Keep the price tag on, return it, so then I can end up buying something else new, wearing it for a day and coming back and returning and so on and so forth. They keep swapping. Now, again, that's why we must create these company policies. So, again, an example would be, it could be, you can only reissue the return or refund within 10 to 15 or even 30 days, right? Again, places like QVC, right? They have theirs like 60, 90 days that you can refund. They want you to actually use the product completely over the span of the 3 months. And then if you're completely unsatisfied, just return it and you get a full refund. So again, every company is going to have some kind of return policy. Some of them might say, no, I'm sorry. Once you buy it, you can't return it, but I can give you store credit to keep the item sold. But instead of, returning the money, right, you're giving them store credit, meaning they must purchase something else within your store, right? That traps the customer from getting their money back, right? Because in this case, you're trapping them within your company, right? Within your store. Other things could be final sale, saying, I'm sorry, no refunds, no refunds allowed, right? Everything's final sale, okay? Or you can either issue a new product or exchange, right, for a full exchange, okay? Now, here's what you need to know here is that if you charge sales tax, right, because that money doesn't belong to you, right, it belongs to the government. So if you were to refund a product to a customer, you also need to refund them a portion of the money that they chipped in for sales tax. So in this case, you must refund sales tax as well. Okay? So let's talk about sales returns and allowances and periodic sales. So let's go ahead and take another example for another where we just record the sale. Okay? So in this case, on May 1st, okay, you sold 50 coffee mugs for $5 each, okay? And of course, sales tax is 8.25%. And of course, customer A decides to buy this with cash for the mugs, okay? So let's record this transaction. So here's a few things that we need to recognize. We recognize that we received cash, we had a sale, and we're charging sales tax, okay? So first thing we want to do is figure out what was the total sales. So in this case, right, I sold 50 mugs at $5 each. So therefore, 50 times 5 gives you a total of 250, right? 250 is going to be your total sales. So you're going to charge your tax based on that. Okay, so 250 times 8.25% should give you a total of $20.63. So then at the end of the day, you should be receiving a total of $270.63. Okay? All right? That's the amount of cash you should have received for this purchase of inventory. Okay? Or for selling the inventory. Okay? So then let's go ahead and see what happens. Okay? What if on May 10, a couple days later, right? Customer A, okay, decides to return some coffee mugs. They wanted to return 10 of them, okay, for a full refund. And of course, your store policy, right, says that they can return within 15 days, so they meet the requirement right there. And of course, you agree that you're going to give them their money back. So in this case, right, first thing that we need to address is, how did they pay you? Okay? If they paid you with cash, then you give them cash. If they paid you with a credit card, you must revert it back to their card unless they want cash back. Okay? You can do that option too, where, hey, no, I don't want to go back to my card, just give me the cash. Customers, they can demand that, and yes, you can do that. Okay? So in this case, customer A paid me with cash, okay? And now I need to create a sales return and allowances, okay? This is going to be a contra account, okay? And this is going to reduce the sales, right? Because in this case, sales is finite, meaning it's once you have a sale, you can't undo it, okay? You have to create a line item or another account to go against it. So you have to create a contra account for this, right? Same thing if you ever looked at your receipt. You return something, they don't say that you refunded the sales, right? They look at how much they originally charge you, then they have a minus line underneath it. That minus line is going to be whatever their sales returns and allowances is, and they're going to minus the sales tax, and so on and so forth. So in this case, that's exactly what we're going to do. We're going to create a sales returns and allowances account, right? We're going to figure out how much it's going to cost me to return the money back. So in this case, if this customer wants me to return 10 of those mugs, right? We originally charged them $5 per mug, so they're getting $50 back, okay? And of course, we're going to be also giving them a portion of the tax money back because they didn't pay me for their, or in this case, right, they're returning product, right? They're returning the product back to us. In this case, right, we talked about this, that sales tax is not based on the quantity of items that you sold. It's based on the actual sales price. So in this case, if I'm returning $50, right, that means 50 of those dollars that I charge sales tax for must be refunded as well. Okay, so therefore, that's exactly what I'm going to do. I'm going to calculate my $50, right? I'm going to take those $50, multiply by my sales tax to get $4.13. So that means I have to give the customer $54.13. Okay? Any questions here? Okay? This is one of the most straightforward and easy concepts, okay? Because it's sales, right? It's like they give it in real life, right? If I'm buying something, how do I pay for it? Right? If I'm returning something, how do I issue the money back? Okay. Now let's talk about another example when we have an allowance. Now, because you guys are going to be more likely a small business, right? You're going to be most likely going to be a startup company, a mom and pop shop, right? One thing that you want to do is, because you're such a small business, the amount of customers that you're going to be getting is probably not as much as a major, well-known corporation, right? Where it doesn't matter who the customer is, right? As a small business, the people that you get as a customer is all that you can get, right? So you want to try to keep their business as much as possible because they are your main core of sales, right? They're the ones that are going to be the ones that's purchasing your product, because since you're such a small business, right? The fact that you could get 10 people to buy your product is already good enough. If you can get 100 people, that's even better, right? But the thing is, out of those 100 people, you want most of them to come back to your store, right? realistically, not everybody's going to come back to your store, but you want people to come back to your store. So in this kind of case, right, when you have a situation that a customer comes in and they complain, you kind of want to keep their business. So you're going to try to do everything it can to keep them satisfied, okay? Even if they, are, not a really nice customer, right? Then, even so, right, they're trying to buy your product, so you want to keep it sold. So don't be too quick to just give them their refund and call it a day. No, especially like in situations like this, right? So we can haggle. Okay, that's the beauty of being a small business shop, is you can haggle your prices, right? Or convince your customer to keep the product. Okay, so in this case, that's where the allowance is, right? Where on May 18, right, customer A wants to return 10 of those coffee mugs for a full refund, but of course they missed the return policy date because they missed the 15 days window of them returning it. They start complaining and they said they just want their full refund. They don't care. And, they're causing commotion, right? And they're getting even more, angry about your services. So what you can do is you could say, well, you know what? Because I couldn't do this for you, how about I offer you, a discount off of those items, okay? I will offer you, I will offer you to get an additional 15% discount off of the items. Since I wasn't able to return all of it, I'll give you a portion of the money back. Of course, a customer is going to take as much as they can get, right? They're not going to deny 15%. That's better than nothing, right? So in this case, they accept it, and this is how you're going to record it. Same thing goes, right? Sales returns and a sales allowance, right? They do the same thing, right? They decrease sales. But one of them, again, a return is full money back. An allowance is only a portion of the money back, okay? And of course, we have to also give a portion of the money back from sales tax. Because again, it's based on the dollar, not the quantity. Okay? And of course, last but not least, however they paid. So in this case, they paid in cash. So in this case, I need to figure out how much 15% of that discount is going to be. So I have to figure out, well, they're trying to return the 10 mugs at $5 each. So that's $50. Now I need to figure out what 15% of that is. In this case, it's calculated to be $7.50. So that's what I'm going to do. I'm going to give them back $7.50, but I also have to calculate the tax based off of those $7.50. So the tax, again, is going to be 62 cents. So therefore, you're going to be giving this customer overall money of $8.12. Okay? They are only giving a portion of the money back. Right? Any questions here?
No.
Okay. So, last section, of course, since we had our returns and allowances, we also have to talk about sales discounts, okay? Sales discounts is going to be, again, one of the major promotional types of deals where it will entice your customers to want to come into your store and buy your product. Because as we know, right, customers, right, depending on what their situation is, their financial situation as well, when they get the opportunity to have money to spend, they need to think about what is worth buying, right? Is it worth it to buy a full priced item at $100, or is it worth it to buy items that are on sale? If it's 50% off, then I can get 2 of those items for the same price. So in this case, right, especially when you have competitors such as Walmart and Target that sells the same exact products, right, you're most likely going to go one that's, less expensive, because then you can buy more items with the amount of money that you spent. So in this case, that is the whole goal. And I can tell you this, that about many of your customers, right, they will not pay full price unless your brand is well known. It's that the quality of the brand is that trusting that consumers will buy the product at full price regardless of when they get it, okay? But if most cases, like if you're a grocery store, again, everything in the store, nobody wants to buy it. No one's gonna want to buy, a case of water for $5.99. They'd rather buy a case of water for $2.99, right? So that's what sales do. Sales is what entices your customer to want to come in and purchase the products, because that's also the price. That's also the point in time where your products actually sell a lot more quickly, because again, if you send ads out about your sale, right, that will pull more people in to want to buy that specific product. All right, so again, a grocery, again, you can have weekly ads for groceries, right? You can have weekly deals, okay, whether it's sent through the email or flyer. Through the mail, you can have things like a promotional sale where you have your grand opening sale. Like maybe you are opening your store for the first time. You want people to come in and buy your products, right? Well, best way to do it says, hey, you come into my store, I will give you X amount of percent discount, right? And of course, you can even have online deals. Now, not only is it for in-store and in-store only, right? You can also give your specific customers who place, who buy your products on an account, right? So for most cases, right, if you end up opening a store account, oftentimes they say, well, if you open up an account with us here at the store, we'll give you a certain amount of discount right away, right? That's also another way that you can entice your customers to want to open up and stay within their business or your store, because they are constantly being reminded that they have to owe money, right? And then you give them even more promotional opportunities, like selling them, saying, hey, if you purchase over $500, right, we'll give you an extra promotional coupon to take $25 off, right? Whatever it is, right? Any way that you can entice your customers, then you will have a sale. Okay? So in this case, right, let's take a look at our very first example when we're doing an in-store sale. So here on June 1st, okay, you sold, your store, is having a promotional sale, okay, that everything is 40% off. So then a customer decides to buy 10 baseball hats, right? Each hat cost you, okay, $10 each, okay, and sales tax is 8.25%. Record this transaction. So one thing that I'm going to say here is we're going to be talking about sales discounts, okay? The sales discount account. The sales discount account, once again, is also another contra account, okay? Because we talked about sales, right? Sales is finite, so therefore you can't undo it. However, that's why you need to create an account for the sales discount, right? Which is a contra account, which reduces the sales, right? Same thing if you look at your receipt, right? If there's a discount on an item that you're purchasing, right? They don't give you the discounted price on there. They charge you for the original price. Then the line below it tells you what your discount is, and it subtracts money away from it. That's the same idea here. You're going to have the sales discount. It's going to be subtracted from what you originally purchased it for. So how do we actually calculate this? Well, let's take a look at the first one, right? We need to calculate what the actual total sales was. So if you bought 10 baseball hats at $10 each, right, that's already going to be given that it's going to be $100. But because there's a 40% discount going on, right, in your store, right, you're going to figure out what that 40% is going to be off of those $100. So 40% of 100 is going to give you $40. So that means you're going to be taking $40 off of the actual selling price. Okay? or for $40 off of your in total sales. So in this case, that's exactly what I'm going to do. I'm going to take my 100 items minus the $40. That means I'm left with $60. If I'm left with $60, that is the amount that you can tax, right? You always calculate the tax after the discount, okay? Never before, okay? Because in this case, right, I didn't actually sell $100 worth of merchandise. I only sold $60. Okay, so again, sales tax is going to always be calculated after the discount. Okay, so here, that's exactly what I'm going to do. I'm going to calculate what the tax is based off the $60. So in this case, it gave me $4.95. And therefore, I should be getting a grand total of $64.95 cash because I discounted $40 off of the original sales. Okay? Any questions here? Okay. All right. And then now we're going to take a look at an opportunity where we give discounts to people who owe us on an account. So another familiar term that we've learned already, terms. We talked about terms before, right? We said that terms can be applied from a vendor, right? To give us, a customer or the purchaser, a discount opportunity. We too can also give those discount opportunities to our customers as well by saying, hey, if you can pay me within this amount of time, I will give you a discount, right? So in this case, we can apply terms to our customers as well. So in this case, right, we said, hey, on July 1st, right, a customer decides he wants to buy in bulk 100 baseball hats, okay? And of course, because he wants to buy in bulk, right, you decided to give him some terms, okay? In saying that, okay, because you're a first-time customer, right, I will give you an opportunity to take a 5% discount if you pay within 15 days. If not, the whole entire bill is due in 30 days, okay? And of course, each hat would cost you $10 each, okay? And of course, sales tax is 8.25%, and you charge them delivery charges to send them to the house for $10 each, or $10, okay? Now, in this case, terms, right? We know terms is a condition, right? In order for this customer to get the discount, they have to pay within X amount of days. So in this case, I am not going to record it at discounted price, right? I'm going to charge them accordingly, and then if he pays on time, I adjust it accordingly, okay? So in this case, I'm going to recognize that this is what's going to happen, right? I'm going to place it on an account because that's exactly what it is, right? He's got terms. He's got a period of time to pay me back, okay? We sold to him 100 baseball hats at $10 each, right? We need to charge him sales tax, and because we're going to deliver it to his house, we're going to charge him an additional $10 for shipping, okay? So in this case, that's what you need to calculate. So in this case, I calculated $1,000. The tax on $1,000 is going to be $82.50, okay? And of course, the delivery charges is going to be completely separate, so an additional $10. So here, he owes me $10.92.50, okay? So then, of course, when the condition kicks in, right, and let's say on July 12th, right, the customer decides to pay for what he purchased from us, and of course, he meets the discount period. So in this case, we must give him a 5% discount because he paid within 15 days, right? He paid 12 days later, all right? So in this case, right, now we need to recognize a few things. We need to recognize that, one, we're not going to receive all of our money. We're going to receive less than $10.92.50, right? we're going to recognize that he just gets a discount. But because, here's a few things that we need to note here. Because we originally charged him full price with the tax included, right? Because he's finally getting his discount now, we need to assume that we have to give back a portion of the money because we're going to be discounting it after, okay? So in this case, right, we know for a fact that this customer owes me $10.92.50, right? Now, of course, when we look at discounts, right, we can't discount anything other than the actual product itself, okay? Because in this case, right, can you discount shipping? No. Can you discount tax? Absolutely not. You can never discount tax, okay? So in this case, so if that's the case right there, then we can say here that this is what we're going to do, okay? If we can only discount the product that we sold, right, from our previous one, we sold 100 baseball hats at $10 each. So our total sales was $1,000. So in this case, I can only take the discount off of the $1,000. So my discount here was 5%, okay? So 5% of $1,000 is $50. So that's my discounted amount is $50. Now, of course, because I charged the tax fully on all $1,000 worth of merchandise, right? But in this case, he only paid $9.50. So therefore, I have to give a portion of that money back. And I figure that out by just taking the amount of that I'm returning or the amount of that I'm discounting. So that $50 discount is going to yield me $4.13 worth of tax. Okay? And of course, he's going to pay me less than what he owes me because I'm discounting his total amount by $54.13. So whatever he owes me, so $10.92.50 minus 53, excuse me, $10.92.50 subtract 54.13 is going to yield me a payment of $10.38.37. Okay, and that's how you deal with dealing with terms. And when your customer meets those terms, right, what can you do to pay off that amount? Okay. So course review, right, we talked about what happens when we sell a product, what happens when we have returns and allowances, and we also talked about the difference between the discounts here. So whether it's in person and in store, or whether it's giving terms and allowing your customer to owe you and give them a discount due date period. Okay? And again, you have to tax everything at 8.25%. Okay, that's the tax we're going to use in this class, right? It's going to be different for wherever you're doing your business in the state and county. Okay, and of course, when we're doing returns, you can only return the sales and the sales tax. But when we're talking about discounts, you can only discount the product at hand. You cannot take a discount off of shipping, freight, or taxes. Okay? Any questions in? Okay. So let's go ahead and quickly go over this real quick. Okay, sorry. I have to restart the Word document. Okay. All right. So here you go. Let's go ahead and take the time to practice this. Okay. So, chapter 6.1 all the way to 6.3, periodic sales, returns, and discounts. So, let's talk about the very first one. On April 5th, right? Well, first let's take a look at this here. Number one, journalize. Assume that sales tax is 8.25%. So on April 5th, right, you sold 100 cups at $5 each to customer A for cash. Okay, so it is April 5th. We sold 100 cups at $5 each to customer A for cash. How do we journalize this? Cash, good. Cash and sales, good, right? And what else? What else do we have to charge? Yes, sales tax. Okay. So in this case, right, let's calculate our sales first, okay? If I sold 100 cups at $5 each, what's my total amount of sales? $500 with the sales, okay? Now in this case, how much tax am I going to be charging customer A? $41.25. Okay, in grand total, how much of money am I going to be collecting from customer A? Very good. And of course, you can put your description here saying you sold 100 cups to customer A. Okay. So then next thing, on April 7, you end up selling 25 cups at $5 each to customer B on an account. And you gave customer B 10%, 15, net 30 terms. So in this case, I sold to customer B on an account on April 7. So how do I journalize this? Okay, no worries. Accounts receivable, good. Okay. What else? Sales and sales tax, right? So in this case, if I sold 25 cups at $5 each, right? What's my grand total sales here? $125, okay? How much tax am I going to be charging? $10.31. Okay, so therefore, in grand total, how much does customer B owe me? $135.31. And of course, I'm going to say sold 25 cups to customer B, okay? And gave him terms of 10% if he pays within 15 days. If not, his entire bill is due in 30. Okay? So in this case, right, if he were to take advantage of this discount, when is the last day that he can do so?
15.
Okay, so we sold to him on the 7th. So that's 15 days after. 22nd, right? So in this case, if I sold to him on April 7, right, it's going to be 15 days after upon selling the product to him. Okay? So in this case, so 7 plus 15 days, that means he has until the 22nd to be able to take advantage of the 5% discount or 10% discount. Okay? Then right here on April 10, you sold 50 cups at $5 each to customer C for cash. Okay? So in this case, April 15, was it? April 15? April 10, you sold 50 cups at $5 each to customer C for cash. Okay? So what happened here? We received cash. Good. What else? Right? We sold and we need to charge our sales tax. Okay, so in this case, if I sold 50 cups at $5 each, what is my total amount of sales? $250. Okay? And how much tax am I going to be collecting?
$20.63.
Good. $20.63. So in grand total, how much cash should I receive? $270.63. And I'm going to make a note here. Sold 50 cups to customer C. Okay. So then April 15 rolls around and customer A wants to return 10 of those cups for a full refund. Okay, so customer A wants to return 10 of those cups for a full refund. Okay, so let's take a look. So when did customer A buy cups from me? Okay, they bought him from me on April 5th. Now, how much did I charge each cup for? $5. So if customer A decides to return 10 of those cups for a full refund, right, how much money am I going to be giving back? So April 15, okay? What accounts am I going to be recognizing here? Sales returns and allowances, right? Because in this case, they're making a return. Okay? Now, what else do I have to also refund? Okay, so in this case, right, accounts payable is when we owe our customers.
Accounts receivable.
Not accounts receivable, because how did customer A pay me? Did they owe me on an account or did they pay me in cash? They paid me with cash. So in this case, I am going to be giving them their money back. Okay? Now, what else do I need to also give back? I have to give them their portion of their tax back. So let's take a look here, right? If customer A is returning 10 mugs, which I originally charged $5 at, how much sales returns am I going to be giving back? $50, okay? Now, out of those $50, how much sales tax money am I going to be giving back? $4.13. So therefore, I'm going to be giving back customer A $54.13. So let me go ahead and put this in here. Customer A returns 10 cups for full refund. Okay. So then let's see what happened next. Okay. April 20th rolls around, and then customer C also wants to return 25 cups, but is willing to accept a 15% discount. So in this case, we said, sorry, customer C, no can do. We cannot refund this for you. Okay. However, we can offer you a 15% discount or a 15% money back. Okay. So in this case, right, he's trying to refund 25 cups. Okay. On April 20th. So in this case, how are we going to do this? What accounts are we going to recognize? Sales returns and allowance, because in this case, we're not giving him a full refund, but we are giving him an allowance. Okay? Okay? How did customer C pay me in the first place? Let's take a look. We charged customer C, okay, on April 10 for cash. So in this case, we will be refunding customer C with cash. Okay. What else do we need to also refund? We have to give him the portion of the money back for sales tax. Good. So in this case, if customer C, right, is trying to get a refund on 25 mugs, but we only gave him 15% back, then how much is that? So I'm gonna calculate whatever.
Is it 1031?
Not 1031. No, that's not it.
So you would, it's customer C.
Mhm.
We're doing April 20, right?
Mhm.
Customer C returns 25 cups. So off the 25, which was $5.
Mhm.
$5? Yes. So it would be 25 times 5.
Mhm.
And then the 125 times 0.15.
Mhm. Mhm. Correct. Because in this case, I'm not gonna give him back $125. I'm only gonna give him 15% of that. So in this case, you're gonna multiply that by 15.15. Yes, $18.75 is correct. So that's how much money that he's going to be getting back from the actual sales. But what was the portion? How do I calculate the portion of that money that I have to refund for the tax? Not 125 because we're not giving him a full refund.
So off of 1875.
Correct.
1934.
1934 is going to be this total here. How much of that is actually sales tax?
Um,
Okay, let's do that again. So 1875 multiply by 8.25%.
1875 times 8.25. I got 154.
154.6. So 155. So in this case, I'll be actually giving him back $20.30. Okay. So then I'm going to go ahead and make a note here that I'm giving, so customer C returns 25 mugs, or cups, excuse me, for 15% discount. Okay. Last but not least, on April 22nd, customer B decides to pay for his purchases and meets the discount. Okay. So customer B decides to pay on the 22nd. So let's see, when did we charge customer B in the first place? We charged him on April 7, right? So in this case, let's take a look at my journal. April 7. Okay, April 7, accounts receivable. So in this case, he owes me in grand total $135.31. Okay. And this is the amount of sales that we have, so 125 plus the tax of $10.31 to give me a grand total of 135.31. So in this case, right, we offered him a 10% discount. Okay? So therefore, yes, we need to recognize how much he owes me, but we are realistically not going to get paid for the full amount of 135.31 because he received a 10% discount. So let's go ahead and journalize this, okay? We're always going to receive some form of money, whether it's cash or a check, right? Right? All right. So what am I going to be recognizing here? I know for a fact I'm not going to get my full money back. Or my full money that he owes me. Right?
Discount.
We're going to do the discounts. Correct. So sales discount. Okay? What else are we going to recognize?
Tax.
Yes, we have to give a portion of the money back because, right, we originally charged him for the full amount. But because he's getting discounted, we have to give him a portion of the money back. And last but not least, we need to recognize how much he owes me. Okay? So let's take a look. How much does he owe me again? He owes me $135.31. So that will be my baseline of the amount that I need to equal up to. Okay? Because that's how much he owes me. Now in this case, he gets to take a discount, right? He gets to take a 10% discount off of his sales. So in this case, 10% of his sales is going to be
13.53.
Not 13.53, right? Can you take a discount off of sales tax?
No.
No.
Is it 12.50?
It'd be 12.50, right? Only on the sales price. So in this case, we only sold to him $125. So that means we can only discount $12.50, right? 10% of $125 is $12.50. Okay? Now, out of those $12.50, right? Since I'm giving that money back or not charging him, right? Because I charge tax for the full amount, right? How much of the tax am I actually having to give back? So $12.50.
$10.31.
Not that's the whole entire tax. I'm not going to give him back all his tax money. I can only give a discount, or so in this case, I'm discounting the product by $12.50. So therefore, how much tax do I have to also give back?
So what is the proper way of calculating it? Because I put 12.50
Mm-hmm.
times 8.25,
Okay.
and I get 103.125.
103.25.
103.125.
So in this case,
So
103 is the tax money I'm getting back.
but the decimal is behind the 3, so it looks like 103.
What? Okay, so you said 12.50.
Mm-hmm.
You put your decimal in the right place in the 825?
Yes, that was just gonna say that.
It's 8.25, right?
Well, and that's the tax, but because it's a percentage, if you're calculating it on a calculator, it's actually 0.0825.
Oh.
Mm-hmm. So in this case, $1.03 is correct. Now, okay, and then I'll go ahead and show you what you would see on a receipt, okay? So in this case right here, we have how much money is customer B actually going to pay me?
$13.53.
$13.53 is the total amount that I'm taking away,
11.47.
not $11.47. Okay, if customer B owes me a total of $135.31, right? And I'm discounting him $12.50 plus giving him his tax money back for $1.03. How much is customer B actually going to pay me?
121.78.
121.78 is correct. Okay, because in this case, right, if you also do the rules of your total debits equal your credits, you can also figure that out as well. Okay, and I'm going to make my note here to say that this is customer be paid in full and received 10% discount.
So that is 135.31 subtracting 12.50 and 103.
Correct. Okay. Now, if you're looking in real life terms, okay, on the receipt, right? Let's just do the example. We'll put the example here. Let's say, right, that you, like on an actual receipt, you'll see the sales, right? You'll say that, okay, this person bought $125, right? And then you'll have a line item here that says sales tax. which is 8.25%, right? And it will give you your subtotal here, right? And your tax. So here, subtotal. So subtotal is going to be your subtotal is going to be 125, right? Then you're going to have your tax. Your tax is going to be, what was it, $10.31. Okay? So then that's going to give you your total amount, right, to be your 135.31, right? If you were to go ahead and actually look at it in real life terms, right, if this person received a discount, right, what you're going to do is what you're going to see on the receipt is you're going to see what was the total amount that that was purchased, right? So in this case, you'll see sales, right? You'll see the sales for $125, right? But, wrong line. But then you will also see a line item that says sales discount, right? The sales discount was 10% of this, right? So that's going to say it's going to subtract $12.50. So then it's going to give you your subtotal, okay, of, what is this? 112.50. Yep, 112.50. Okay? And then your second line item is going to be your tax. Okay? Of the 8.25%, right? And that's going to give you, okay, so tax on 112.50 is going to be 0.0825, right? That's going to give you $9.28, which is going to give you your total price, total of $121.78, right? Those are the exact numbers that we just calculated right here, right? And the difference between this, okay, so in this case, right? In this case, this is my full original sales that I got, right? Here, I calculated a discount, which is only 10% of my original sales. So therefore, there's my $12.50. Now, in this case, I got charged tax, right? In this case, I got $9.28 tax opposed to $10.38. What's the difference between those two? The difference between those two is going to give you your $1.03. So that's why I told you, instead of having to figure out this number here, right, figuring out the difference between the two, it's easier if you just take the $12.50 discount and just multiply it by the tax to get you the money back that you're supposed to refund. And of course, the difference between this receipt and the second receipt is you're getting $121.78, which is correct, right? So in this case, this is taking two different receipts, comparing against each other, and seeing what the discount does to the overall sales itself, right? This is how we calculate it. This is how we take a shortcut and calculate it differently through the accounts that we have, right? Instead of having to map out everything, right? You're able to do it just by doing this, right? Looking at what the original sales was, discounting it that, multiplying the discount by that amount, and then figuring out how much cash you're actually going to be receiving, right? So that's comparing the receipts next to each other, one without the discount, one with the discount. Okay? So any questions in regards to this chapter 6 exercise?
No.
All right. Well, that is it for today. Okay? So again, we will take a look at chapter 6.2 tomorrow. Okay, 6.4, excuse me, 6.4, which is the last section of chapter 6.